Next up, another one of our keynote speakers. This guy is a legend in the mining sector, the oil and gas sector, and he does a great report. It's Rob Murdoch. He's a principal consultant for Austex Resource Opportunities, and today he's going to do a review of the ASX Gold sector. But this is a subscription service, ladies and gentlemen. He covers all sectors, but today, obviously, it's a virtual gold conference. Rob Murdoch, over to you to give us an overview, a review of the ASX Gold sector, your 2020 vision.
Thank you, Kerry. Thanks for the introduction, and hi, everyone. I'd just like to give you a bit of a review of how 2020's been, a bit of 2020 vision on the gold sector and how it's compared to the rest of the market. The first thing is just to introduce our service a little bit. We produce a report every day, which is a professional critique of every resource project announcement. And as the graph down the bottom shows, over the last 4 years, the numbers of announcements we cover each month is seasonal. It varies. It ranges from about 600 to 900 a month. So that's quite a lot in the 25 or so editions over the month. We also cover a summary of all the key technical related facts to projects in investor presentations, and they can range from 50 to 150. The COVID-19 this year really has had no material impact on the number of announcements. It has had a dampening of the number of presentations that have been made, investor presentations, despite the fact that we have had quite a lot of webinars. Why do we invest in the resources sector? Well, if we take a graph of all the average share prices of the whole sector over the last 4 years, we can see a nice steady rise, and over the period it's grown about 18% per annum. Of course, there's ups and downs, and you can see a nice little V there beginning of this year, which is the COVID V, and it does vary depending on commodity prices and general market sentiment. Coming into the last 12 months, the COVID V is very noticeable there, but despite that, the average share price of the ASX resource stocks, and that's right across the market, not only gold, but oil and gas, the battery minerals, all of the base minerals, fertilizers and so on, have risen 14% on average. But there are little highs and lows in the market that can be used by investors to choose when they buy and when they take a profit. One of the useful guides we provide every Monday morning on the previous week is in a little supplement to our report we call the Austex Lite, is just a very simple ratio of rises to falls, so that we divide the number of companies whose share price has risen divided by the number who have fallen. And when it gets down to about a ratio of about half, 0.5, which is one rise for every 2 falls, it's quite a lot of buy opportunities out there. Good value stocks that have dropped off 20 or 30% over the last few weeks or months or so. And when it gets up around 1.5, it's time to start thinking about maybe looking at some profits, because it will, as you can see from the graph there, the red line is the 1.5, the green line is the 0.5, and we're regularly oscillating between the two. I've shown some red arrows there that show where it really bottoms out and where great buy opportunities come in. They, of course, were in March when COVID was of concern. The end of the financial year in June is the middle one, and the one on the right-hand side, you might recall recently we had a lot of concerns both about world economies, but also too about the way the COVID disease was spreading in North America and Europe. It's great opportunities. You'll just notice that it's been up to a peak. It's been quite up and down the last, since the COVID hit the deck in March, and it's just sort of steadily coming back down now. So there might be hopefully some good buy opportunities there. Okay, let's focus now on the gold side of things. If we plot gold over the top of that previous graph of average share prices, and it's in red, we'll see that on the left-hand side of the graph, the red gold line has a lower average share price than the whole ASX sector. But after the COVID V, we noticed that the gold price, average gold price, has gone up considerably more than the rest of the market. It's hit a peak in around September and October, and has dropped back a little bit in the last few weeks since the US election in particular has been, well, it is settling anyway. If we look at the different sectors of the market, if we take the ASX market and we divide it into 4 quartiles, the gold companies are shown there in yellow below the quartile figure, and the gold companies make up about 45% of the 3rd quartile. That's the companies between 12 and 28 million. So that's where they are focused. They're 34% of the 1st quartile, 40% of the 2nd, and 31% of the 4th quartile. The best share price gain has been seen by companies in the 1st quartile. Gold companies have risen 179% on average. That's the companies with greater than 92 million market cap, and they've taken that rise over the last 12 months. The 4th quartile has moved up the least, about 58%. But in the last month, if you look at the right-hand column there and you look at gold and the figures are all in red, we've seen that the average in all the quartiles of the gold sector is down about 4%. So that could be heading into some opportunities. Typically, the way a share price moves as a project status changes from early exploration concept to a mining project is shown by the pink line. It's a stylized sort of graph. Early explorers are generally in our 4th quartile of companies, moving up when a discovery is made into, on average, in the 3rd quartile, which is where we've got a lot of companies at the moment in gold with a lot of drilling going on. Mergent companies, again, an opportunity for a share price appreciation in moving up into the 2nd quartile while they're in the feasibility stage. Then we go through a long sort of hiatus of permitting and project financing. Gold's better off than all the other commodities. If you have a look at battery minerals and some of the technology minerals, this goes on and on and on, and not to mention coal, of course, projects in Queensland that go on and on and on a bit more. Eventually, we get to the stage of producers where they are able to get the project off the ground, commission, reach nameplate, and those companies will find up in the 1st quartile. But so it's important to keep in touch with what's going on, and that's what the whole purpose behind the Austex Daily is, so that if you're interested in stocks that are moving into the drilling stage, then you'll find that we can conveniently divide the report up into sections, so that's easy to follow. This is a typical front page of a report back in November. As you can see, each day there's lots of covers, companies to cover and investor presentations. Beside each code and company name in the index, you'll see a letter, and that helps readers move straight into the part of the resource market that they may be interested in. Section A deals with new deals, and we also pop in any new listings. Section B, production. Section C, project appraisals. This is where companies are going through feasibility stages, working out the metallurgical recoveries and so forth. Section D, updates on reserves and resources. Section E, drilling intersection, always important, because this is where you actually see the maximum share price rise if a discovery is made. Drilling in progress at the moment, because the market's been hot, people have got excited about drilling that's starting up in grassroots areas and so forth, but sometimes they can be disappointed if the results don't meet reality. So, you know, the drill intersections is always the best guide there. Getting further back, targeting exploration, in other words, doing geological, geophysical, geochemical work to find targets to drill. Capital raising is always very important. And a final one on some debts and corporates. We are focusing only on projects, so we only put in announcements on debt or corporate matters where they may affect a project. So that's how we keep everyone in touch with what's going on. And we've got a good readership through, particularly professionals in the resources industry that are busy on a day-to-day basis and like to sit down with a coffee each morning and get a hit right across the whole sector without having to wade their way through a big organisation they have to go and find the stuff for themselves, or just picking up what the journalist in a journalistic publication may consider to be important. So how does gold compare with the other commodities? In 2018, gold companies made up 28% of the market, and they now make up 39%. So there's been a real shift over the last couple of years to gold. They dominate the ASX sector. They're followed by oil and gas, which has sort of been pretty steady. Copper have declined over the last couple of years, surprisingly. Nickel has risen. It's quite popular at the moment. Lithium has fallen. Coal numbers have fallen. Iron ore numbers have increased slightly, and lead and zinc stayed about the same. Some of the other sectors, such as cobalt, you might recall very strong a year or so ago, there were 40 to 50 cobalt explorers. Now they're 4. So they've disappeared out, and most of them have gone into the gold sector. The average share price compared to over the different commodities over the last 12 months, the average share price of gold companies has gone up 130%. So, and a much better. Nickel has followed. Of course, there's been a couple of discoveries that have helped that along, 121%. Kaolin and HBA has been rather amazing, 88% rise in their share prices, and the others follow on down there with actual falls in the bottom right-hand side there of bauxite and coal at greater than 10%. So gold's done very well. I hope that you've been in there with lots of gold stocks over the last 12 months. At the early stages, gold exploration and finding new discoveries is all about drilling. And 87% of the ASX listed companies file what is called an Appendix 5B report. If we look at the total exploration expenditure quarter by quarter of the companies that have filed their reports over the last 5 years, you'll see that it's risen from a total of 274 million in a low of first quarter 2016. It hit a peak at third quarter of 2018, and it has been steadily falling back since then. If we look at our average share price movement by exploration spend, if we have a look at the 12 months of the financial year 2020, exploration spends by a company of over $1 million has seen their average share price rise by 10 to 20%. Those that spent less than $500,000 over the financial year fell 20% on average. So it's important when you are looking at gold stocks to make sure they're actually spending some money on their project, that they have faith in the project and they're out there spending, because by spending, they'll find things. By finding things, they'll allow the stocks, or the stocks will appreciate for you. Interesting enough is the amazing ability that is provided by the ASX in capital raisings for exploration. If we look at the amount of cash that's been raised quarter by quarter in the 5B reports over the last 5 years, there's some peaks there of around 1,000 million. But look at the third quarter 2020, the one we've just got the reports for. $1.87 billion has been raised on the ASX for exploration by Appendix 5B reports. That's an amazing amount. It's far better than we've seen over the 5 years that we've been monitoring that amount. What's also happened, of course, over the 5 years is the number of companies that have gone down. And this is actually why the total exploration has gone down. We've dropped from 858 companies in 2015 to around about 726. Actually, that figure is a little bit out of date. It's gone back up to 730 with a few listings in the last week or so. but we have less companies listed on the ASX now. But if we look at the next total capital raisings, debt, and the actual cash held, in particular the last row in yellow, we can see that now, the end of the third quarter 2020, the average company holds 7.74 billion. A year ago, they held 6.25. So they actually got more money to spend. What does that mean? It means more action, more drilling, more announcements, and more opportunity for investors to make a gain in any exploration discovery. And the other thing is that you have to raise money. You have to actually get appreciation in your stock over a period of time. If you're looking at financial year 2020, the companies that have raised more than $5 million have on average rose 20% over the 12 months. Companies that raise less than 5 million have fallen over the 12 months of that financial year. So again, it's important to look at when you're looking at companies that have the ability to raise money, and sort of 5 million or above is the sort of money that needs to be raised today, because exploration is getting more expensive, it's getting deeper, it's getting more complex, but as a result of increased technology, it is actually also getting much more successful. And we've seen a lot of discoveries in the last year or so in a number of commodities. Where are the ASX gold companies working? Well, 68% of them now are in Australia. If we went back 12 months ago, there would have been 50%, but COVID travel restrictions has brought a lot of companies home that didn't have great projects overseas. In the overseas countries, the continents that have the most activity by ASX resource companies is Africa, with 28 companies active there from the ASX and 18 in North America. We're seeing great growth to where USA now is the company that has the most ASX listed gold explorers, 9 of the overseas companies, with PNG, Canada, Chile and Cote d'Ivoire all with 6. Looking at the Australian states, WA dominate with 129 of the ASX 277 ASX gold companies are focused in Western Australia. 17 in New South Wales, 15 in Queensland, 14 in Victoria, 6 in the Northern Territory, 4 in the South Australia, and my poor old home state of Tasmania doesn't get a mention.
Couple of minutes.
Whereabouts around Australia, where is the action? Well, there is about 13 different hotspots at the moment for exploration. These are the areas to keep an eye on, not only for gold, a few of them are for nickel as well. They're scattered there, and there's a number in Northern Australia, particularly in the Northern Territory. There's some great opportunities sitting there in the East Tennant, the northwest of Queensland and the Macarthur Basin, north of Concurry are the hotspots down there. Down in the southeast, the Molong High, which has produced the Boda discovery, and of course is the home of Cadia, is very prospective. Western Victoria with Staveley's discovery, and the north of Bendigo, where Gina Reinhardt and others are exploring for gold. And of course, you've got Kirkland Lake doing very, very well. Number 13 is
Murdoch.
number 13 is the Gall of Creighton, and over in the west there's quite a number of areas. The Patterson number 11 has been very hot. A lot of discoveries there with Havilah and Haberon rather, and some other discoveries with De Grey in the Pilbara, in the Yamana Belt, down in the Fraser Range, and of course the nickel discovery and the Julimar. Yeah, looking at who's been successful, just run through some companies that have done some amazing things in the last 12 months. These are explorers without a million-ounce resource. Magnetic Resources is a market cap of 246, Catalyst 216, and so forth. You can see them.
Rob, we've run out of time. Can I just get you to do a quick summation for me? I'm so sorry.
Yeah, that's all right, mate. We'll cut to the end. Sorry, that was bloody quicker than I thought.
Yeah, I know.
So,
actually, I beg your pardon. I beg your pardon. You do have another 5. I beg your pardon.
I was going to say,
All my fault. All my
can we
fault.
go back?
Yeah, you can go back briefly.
All right, we go back where we were. Did you get this slide, what I said about this one?
Yep.
Okay, moving on to the next one. These are the companies that have performed the best market cap wise with a resource of greater than 1 million ounces. De Grey has an amazing market cap of well over $1 billion. Bellevue also over $1 billion. Others. Nova's interesting up in Canada. It's got a resource of 2.5 million ounces. The grade is very low, but it's still got a great market cap, and the others are there to see. Emerging gold projects, these are companies with resources greater than 1 million ounce in size of resource order. These companies are companies that could go into production. Some of them are repeats from the last graph. The average value per ounce of resources for this group is between $100 and $300 an ounce Australian. Some of them are cheaper, where the market considers that it's a little bit more risky, or there may be joint venture partners in there. And the higher the average is, the greater the market's confidence. Top of the market's confidence is in De Grey, where you can see their ounces that they have announced. And of course, this doesn't include Hemi, is 574, but when Hemi's included, that will probably come down. The emerging gold producers planning standalone plants and producing greater than 10,000 ounces per annum. Looking at those, there's about 7 of them that we've got on our radar at the moment, with Cahaya in Indonesia looking like they're quoting an all-in sustainable cost under 1,000 an ounce. Most of the rest of them are around 1,000 to 1,300, with Ora Banda the highest at $1,566 per ounce. These are the producers in order of their group ore reserves. The market value per ounce in reserves is in the range generally of $300 to $600 an ounce, with their resources 1 to 300. Lower than average values will again suggest that there are issues. West African companies do suffer a little bit there, and higher shows greater market confidence. And finally, the gold producers in their all-in sustainable costs for Q3. Aurelia came in the lowest at 1,104 in the Cobar Basin, Saragen second, and Evolution third. And most of them are in the range of 1,100 down to about 1,500, with a few of the other companies with issues. They've got higher internal rates of internal all-in sustainable costs, sorry. The best producers, the best performers of the gold producers post-COVID has been Aurelia's up 74%. Panto is up 37%, although they're a small producer at the moment. And the others going through there to where Saracen must be good value at just up 11% in that particular time. In closing then, I'd just like to say again that Austex Resource Opportunities is here to point out opportunities within the ASX resource sector and to keep our subscribers independently informed of the key facts relating to announcements and presentations in a timely manner. One of the things we put in the Austex light, but what are the companies that have fallen the most over the last month? These are the gold companies I've listed there. So there's lots of great opportunities. A lot of companies there have dropped in price over the last month between 15 and 47%. So they're worth talking to your financial advisor about. I'd like to take the opportunity to thank Kerry and the team for allowing me to talk, and for everyone for listening. So thanks very much.
Rob, apologies about trying to cut you off before. You were
That's
running
all right.
Absolutely on time. Your email is down there if people need to get a hold of you to ask about subscribing to the report. One of the things you said earlier, Rob, is you said that for that, because there's a number of people, got about 1,000 people at the conference today, and some of them have never invested in this area before. What I'm going to ask you is, You mentioned drilling, and you said when you see a company that's doing drilling, that is a good time for people to take a look at a company. Is that correct?
Well, I think it is, because we generally see the biggest percentage rise in the event of drilling success. We do see rises again as the feasibility study looks like the project is commercial. Then after it's declared commercial and it has to go through all the permitting, the project finance and all sorts of stages, it starts to lose value. You know, companies that do really well are companies that get announcements out to the market about every 3 or 4 weeks, keep the market interested. After about 3 or 4 weeks, the market starts to forget. So I always know if a company's jumped up on an announcement, don't jump in, just wait a few weeks and it'll start to drift back again for the opportunity to get in then. So yeah, it is a great time, and you need to know what drilling's coming up. And what drilling results are there, but particularly what drilling is coming up.
I think Austex is a fantastic resource, not just for the corporates, but for individual investors. But as Rob said as well, make sure you talk to your financial advisor, do your own research, make sure you subscribe to the Austex resources opportunities. And Rob Murdoch, just want to say thank you so much for giving us an overview of the gold sector. It certainly looks like there are a lot of opportunities out there.
Absolutely. Thanks, Kerry.